Hey everybody, Brian here. It's Thursday the 21st, and markets were kind of mixed here today. S&P 500 was up a dollar, or about a half of a percentage point, after we took out that previous low from the 2014 fourth quarter yesterday, and we're getting a little bit of a bounce. This is a two-day chart, by the way. Each one of these candles represents 2 days. It's just a little bit more convenient to see it that way to zoom out without getting the candles too compressed. But on this daily chart, we're seeing a little bit of a bounce. It's not really anything that we can have any confidence in yet. We've still got a declining 5-day moving average, and as we know, it's the direction of the 5-day moving average that's more important than being above it or below it for a small period of time. We still have a downtrend, and if we take even just a simple trend tool, we can see that we remain below that trend line, and we've got the volume weighted average price year to date up here at what is this price, about 191 and a half ish. So the market remains in a downtrend. Now, on the positive note, meaning not that this market is positive yet, there's nothing really bullish about this market, but the budding reasons for enthusiasm, I guess, would include that we did in fact come down and form a right shoulder as we wanted to see happen. So now we've got an inverted head and shoulders pattern, and you could call this kind of the neckline right here. So breaking above both of these trend lines might help for this market. We also came down, and I had pointed this out in the chat room, that we pulled back and held this volume weighted average price first thing in the morning, and then in the afternoon pullback as well. So going forward for tomorrow, for hopefully the next week or two, the volume weighted average price from the lows will be something we can continue to reference the strength against, and we look at that because that's where an emotional event occurred. That is this near term, what's looking like potentially a near term low. We also have that we held above the volume weighted average price from this gap lower over here and from 3 days ago, and the 2-day volume weighted average price we closed right at as well. Today's VWAP, well, we closed just below that. So we've got mixed messages. This is the potential process of buyers regaining control from the sellers in here. It's not certain yet, and we still give the benefit of the doubt to the sellers, but keeping in mind that this has been one powerful sell-off, here's our bigger band of resistance. The way I see it, the best scenario would be that we do break this downtrend line here from the inverted head and shoulders pattern, rally up to this area, and then pull back and find a little bit of support at a flat to rising 5-day moving average. If we did that, then we would be looking to buy strength, and not necessarily above the high, but as it starts to get moving, if it's above the 1 or 2-day volume weighted average price, and set our stop underneath this level. Now, that's imagining a lot here that we don't see yet. We still have to realize, of course, that the market is in a downtrend. It's below the declining 5-day moving average, and therefore the intermediate term trend remains guilty till proven innocent. The longer term trend is also clearly in a downtrend, seemingly due for a bounce, the magnitude of which no one knows how high it can bounce if it does get a big bounce. But I don't expect it's going to happen all at once, and there'll be plenty of opportunity to trade that. And just a reminder, I'm going to be out of town all of next week, and I'll be back the morning of February 3rd. So just want to make sure everybody is aware of that. Next week, I'm going to be posting a 3-hour class, the free for free on the website. That'll be good for all subscribers, and that'll be spread out over 2 days, 2 1.5-hour videos. On the day, probably on the I'm guessing probably on the 4th of February, we will have a special webinar that goes along with those two classes, so that you guys can have any questions about the education answered at that time. And that way we're kind of all on the same page with the basic concepts. So the NASDAQ finished with a slight gain as well, up 10 cents. And here's the volume weighted average price from the low here as well. These were things that we were referencing in the chat room that they had held. And before we even do that, let's just go back to the S&P 500 for a moment, because it pretty much did exactly what we were looking for it to do today. Looking at last night's video, it pulled back, and then as it got back above the volume weighted average price, that's when the buyers regained control. Worst case stop would have been below here, or a more aggressive stop below this level. And until the afternoon, where in the afternoon, actually right here, I said we're looking vulnerable, and it looks like it's heading lower, and sure enough, it did. And I said worst case stop goes right here after it made the new low. So those are the little intraday trades that come into the trading room. One thing I'm looking at here is that you can look at this maybe as a shoulder, a head, and a shoulder as well. And you can say, well, which one is more powerful? And the fact is, we remain in a downtrend, so we have to be suspicious of anything that does look bullish and be prepared for the potential of further downside. There's no such thing as down too much if there's still sellers left in the market. Anyways, back to the NASDAQ, we have same thing here. This is what we've been looking for. Now, this is a bigger pattern in that it's taken shape over the course of a week, and if it's to get back above this neckline here at 102.5, do you want to be the guy that buys right here, or would you rather buy as it gets back above this level and then feed a little bit out a dollar higher, because they often rally up to there, pull back, and then consolidate, then the real move begins. So you don't want to be the person who buys above the neckline. If it's, well, it depends on how it gets there, of course, as well. But things are setting up a little bit bullishly. They're not bullish, but they're setting up for potential bullishness. Big difference. Here's the volume weighted average price from that gap lower. We can see that we held above that at the end of the day, and we also held above the volume weighted average price from yesterday's low. So again, an important psychological point. I think that realistically, we give this market down to about 99.75, and we don't. In other words, it's too early to be an aggressive buyer because we still have that declining 5-day moving average, and selling short doesn't seem to make much sense in here with this potential turn setting up. So we're in one of those periods where, when in doubt, do what? Sit it out. Do nothing. Shrink your trades down to a shorter term time frame. It could go either way here. We're at a critical point, and do you want to be the person who bets on what's going to happen and think the market cares about your opinion? I don't. I want to wait for actual evidence before I get involved. So we know where we have key support. We know where we have this potential bullish little pattern setting up from, but it's all within the confines of, here's the year-to-date volume weighted average price, and we've got all these prior support levels that have the potential to offer resistance. So you can't get overly optimistic, even if it does exactly what we want it to do, which is to kind of run up to there, break that neckline a little bit, pull back, create a higher low. Here comes the 5-day moving average flattening out and turning higher, and to be a buyer somewhere in here with a stop underneath this level. Let other people buy it above the high. Let them chase it. We'll sell a piece to them. But because we have the potential for resistance at all these prior levels that we've come down from in the year-to-date volume weighted average price, and of course we are in a bear market, and any bounce that comes from here, it might last 2 weeks, but it's still going to be considered a bounce until we have enough time to say this market has reestablished support. The longer term moving averages have flattened to turned higher, and that's going to take a lot of time. So it's basically not happening. It's not in the realm of possibility right now. The Russell 2000 obviously continues to look the worst. It was down 23 cents here today. So we had a little bit of outperformance in that market yesterday, but today the sellers were back, and we did finish though bullishly above the volume weighted average price from the low. So again, in these, especially in the NASDAQ, the S&P, and the Qs, the volume weighted average price from the low is turning into an important level, and we're seeing the same pattern develop here in the in all of these markets, the inverted head and shoulders pattern. If we get back above this band of resistance, do you want to be the person who buys right here and then sets your stop way down here, or would you rather be in front of it and maybe buy above this level with a stop under there, and then it gets up to that level, feed a little bit out, it pulls back, then begins to rally, then you reestablish your position, because again, we can't have confidence in a bullish scenario when we have this much pressure on the market. We broke that downtrend line, great. Breaking a downtrend line doesn't mean we're in an uptrend. It means the rate of descent has failed, or slowed rather. We have, for an uptrend, we need higher highs and higher lows above a flat to rising 5-day moving average to have any confidence in the intermediate term trend. We are at a critical level where it has the potential to do that, but the evidence isn't there yet. And keep in mind again that there's the volume weighted average price year to date. Look how it lines up with this prior little band of support in here, which turned into resistance as well. So again, just very difficult to get and stay bullish in these markets. Semiconductors, kind of did what we wanted it to do, rallied up a little bit into this prior band of resistance, pulled back, and this was the drawing I had made yesterday. So we've got, we've got what will hopefully become some support in here near 47.25 to 47.50. If we take the volume weighted average price from the gap lower, we want that to hold, and the volume weighted average price from yesterday's low ties in right exactly with the 5-day moving average. So ideally we hold there, but we wouldn't be concerned or want to get short unless it was, and depending of course how it gets below it, but unless it really were to get below about 47.05 to 47.10. I think we could be, cautiously still looking for a potential turnaround scenario as long as it remains above 47.05-ish, but anything below that really kind of puts the kibosh on any potential upside. I never use that word, so I'm kind of amused that I used it now. I'm not sure why I did. Biotechs also, they're still in a downtrend. Yesterday they were the strong performer. Today they're down 2.3%. So get used to that in these other markets where you might look at it one day and go, wow, awesome day, it was up 3% or whatever. Well, what comes next? And protect yourself with by taking profits on rallies in downtrends if you are trading long. And yesterday we were long in this area in the biotechs. They rallied up beautifully. Today they pulled back right to where we wanted to see them find support. And now they're kind of at a critical level. If they're unable to hold, I think probably above 273-ish tomorrow, then this budding recovery in the biotechs is likely in jeopardy. We have a few things that are reason to be optimistic about. We broke that downtrend line, and that downtrend line where we had previously seen the resistance, we're seeing support, but the problem is you can't buy along that support line because you'll be buying all the way down. That's not enough to turn a market. To turn a market, we need higher highs and higher lows and a flat to rising 5-day moving average. And that's this type of scenario that could possibly develop from here. We had a nice trade in Apple today, and again, Apple's a piece of garbage stock in a longer term downtrend. I made it very clear last night that we wanted to look at this as a day trade candidate, and the scenario that I outlined came in almost pretty much darn perfectly. That is, we were looking for it to pull back to the 2-day volume weighted average price. We were saying perhaps a little shakeout below this level in here, find support at the 2-day VWAP, but we didn't want to buy on the pullback. We don't buy on pullbacks. Instead, what we wanted to do, and I said, was if it pulls back to that level, and this is what we did in the chat room this morning, was then to look at the stock and say, okay, as it gets back above today's volume weighted average price, that tells us the buyers have regained control. We found support at the 2-day VWAP, and if that support failed, then our stop was originally right here, right underneath the day's low. So, just under that level, purchasing here, and then I don't remember the numbers and I don't have them written down in front of me. We took a small piece off real quick as it popped, a third of the position, and we took another piece off somewhere up in this area, and then over at about 97 and I think it was maybe around in this area that we had gotten out of the balance of it. So use it for what it is. It's a stock in a downtrend that gets oversold, presents us with a low risk, high probability trade. We take the trade, we move on. We don't get married to the idea that Apple's a great company and that we need to worship their products and that. But it's starting to show some signs here also, as we mentioned, that is this the shakeout? Is this from the failed break lower that we see a faster move higher? Well, we have a couple key ingredients here that, clearly if it breaks below this band of support, then that recovery is completely out of the question. So right now we can kind of look at this stock as well and say, is this a left shoulder? This is the head and this is the right shoulder. And if so, how do we trade it in a low risk way? Do we just close our eyes and buy it because it's Apple? Absolutely not. So we want to be aware of, such as the little neckline that's setting up in here. But do we want to buy it above there? Well, where's today's volume weighted average price? Right now, we closed below it. So we don't want to be owning it right now overnight. Here's the 2-day VWAP and the VWAP from the low. So we want to see that Apple holds in this area. This is going to be key, I think, for tomorrow, even down towards 95. I think today's low, but it would be best to see this level hold. If it does that, then perhaps tomorrow it's even a purchase above 97 bucks a share with a stop underneath here. And then if it breaks that little neckline, if it's, let's say, daily R2, we would look for a move maybe to daily R2, sell partial, see it pull back to what might become the volume weighted average price for the day that looks like this. And then as it finds support there and rallies again, maybe add what you had sold, set your stop under here, and then look for a turnaround. But again, Apple is still in a longer term downtrend. It is not a good stock to be invested in at this point.